Unlocking Canadian tax obligations, non-resident rental income explained. Canada is a popular destination for real estate investment, attracting many non-residents looking to capitalize on its thriving rental market. However, non-residents who earn rental income in Canada are subject to specific tax requirements under the Income Tax Act, particularly under Section 216. It is crucial for non-resident landlords to comprehend these tax obligations to ensure compliance with Canadian tax laws. The basics of non-resident rental income. Non-residents of Canada who own rental properties in the country are required to report their rental income to the Canada Revenue Agency, CRA. Rental income earned from Canadian properties is subject to taxation in Canada, regardless of the landlord's residency status. This includes income from both residential and commercial rental properties. Section 216 Tax. Section 216 of the Income Tax Act outlines the tax obligations for non-resident landlords earning rental income in Canada. Under this provision, non-residents must file a Canadian tax return to report their rental income and expenses. Additionally, they are required to remit tax on their net rental income at a rate of 25%. Calculating tax on non-resident rental income. To calculate the tax payable on their rental income, non-resident landlords can deduct eligible expenses related to their rental property, such as property taxes, insurance, maintenance costs, and property management fees. The net rental income after deducting expenses is then subject to a 25% tax rate. Claiming deductions and tax credits. Non-resident landlords may be eligible to claim deductions and tax credits to reduce their tax liability in Canada. For example, they can claim a tax credit for taxes paid in Canada against their total tax payable. It is essential for non-residents to explore all available deductions and credits to optimize their tax situation. Compliance with Canadian tax laws. Non-resident landlords must ensure compliance with Canadian tax laws to avoid penalties and interest charges. Failing to report rental income or pay the required taxes can result in significant financial consequences. It is advisable for non-residents to seek professional tax advice to navigate the complexities of Canadian tax regulations. Conclusion. In conclusion, non-resident landlords earning rental income in Canada are subject to specific tax requirements under the Income Tax Act, particularly under Section 216. Understanding these tax obligations and complying with Canadian tax laws is crucial for non-residents to avoid penalties and ensure financial compliance. By staying informed and seeking professional guidance, non-resident landlords can effectively manage their tax liabilities in Canada. Unsure about your non-resident rental tax obligations? Call 416-283-8874 or visit theaccountingandtax.com.